Hello there, and welcome back to another episode of TA with MK. My name is MK, and in today's episode, we're going to dive a little bit into the topic within the bigger category, I guess, of risk management. That topic being the long position and short position tool that they have in TradingView that you can use to see what your risk to reward ratio is going to be on any given trade. We obviously know in trading it's important to manage your risk. And in today's video, we're going to focus on that long and short position tool to help you do just that. If you guys are liking the content, as always, please remember to like and subscribe, and let's go. It's TA with MK. It's TA with MK. Now, if you've been following my channel for more than 1 or 2 days, or especially more than 1 or 2 weeks, then you know that I'm a huge fan of my definitions. Why is that? Well, because if I try to explain things in my own words, I end up tripping over my words and sounding fairly, well, we know. There's a lot of insert whatever words you want there. All right, so I'm going to read here from Instapedia, calculating risk and reward. What is risk to reward calculation? Are you a risk taker? When you're an individual trader in the stock market, one of the few safety devices you have is the risk to reward calculation. The actual calculation to determine risk versus reward is very easy. You simply divide your net profit, the reward, by the price of your maximum risk. Sadly, retail investors might end up losing a lot of money when they try to invest their own money. There are many reasons for this, but one of those comes from the inability of individual investors to manage risk. Risk to reward is a common term in financial vernacular, but what does it mean? So the key takeaway from that, which I may as well read one more time, is to calculate risk versus reward, you divide your net profit, which is the reward, by the price of your maximum risk. Okay, so now that seems easy enough, so you might ask yourself, well, what would be a good risk to reward, ratio then? And then, you might ask someone that's experienced in trading, or at least more experienced than you, that has invested previously and maybe even had some success in it. And unless they, intend to divulge a little deeper or expound on it, they might give you that very simple answer that we hear all the time in trading, that is, never risk more than you can lose, or it comes down to your risk tolerance, right? And these are just phrases that we hear all the time, but without more context, it doesn't always help, right? Because, for example, you might know that you have $2,000 that you could afford to lose that is your trading portfolio, right? Well, does that mean on any given trade you should be risking that entire $2,000 because it's money that you can afford to lose and life still goes on, or that it's, it fits your beginner risk tolerance? That, hey, it's fine if I lose this $2,000 because I can still feed my children, pay the house bill and the mortgage and so on. Well, that's not the right way to look at it, and that's where sometimes having something as simple as, say, Google in this case, we could type in, what is a good risk to reward ratio when investing? And the first answer that comes up, which is actually a very good and common answer amongst investors, or at least a good average, we'll say, it says approximately 1 to 3. And what does that mean? Well, it means in many cases, market strategists find the ideal risk-to-reward ratio for their investments to be approximately 1 to 3, or 3 units of expected return for every 1 unit of additional risk. Well, then it even goes on to say investors can manage that risk-to-reward more directly through the use of stop-loss orders and derivatives, such as put options. We're not going to discuss the derivatives and put options in this video, but we will discuss how your stop-loss can come into play as far as calculating your risk-to-reward. And when it talks about units, the easiest way to think about that is just in the case of the US dollar, it's basically saying in an investment where you want to have a 1 to 3 risk to reward ratio, for every $1 you're risking, your expected return, or wherever you're putting your take profit levels, you're expecting to make $3, for every $1 you're risking. So the first thing we want to do is explain how the tool works, and to do so, I'm going to use this daily chart for the token SHIB. Everybody that has been in trading for more than 2 days with crypto knows what SHIB is, right? It's one of those S coins that outperformed way more than it should, which I guess is the entire market. But anyway, we're going to show you kind of a past example of what would have been a good trade with an okay risk to reward ratio. And to do that, first, without going into too many details on exactly support, resistance, blah, 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 like I have tons of other videos about that, but just to quickly explain how you would come to this conclusion of where you're going to open your trade potentially, set a stop loss, and have a target, I wanted to first zoom out on the SHIB chart, and we're looking back here to this previous price action that happened between early June of 2021 and when SHIB first had its huge breakout in early October of 2021. You could clearly see that it had resistance at this level up here 4 different times, right? And then it had that explosive move to the upside. Well, fast forward to more recent price action, and you could see that SHIB clearly had been using, outside of this one giant dip below, it had been using kind of that same level as support, right? It had broken back above it and had support here. We'll zoom in a little bit more here in a sec, but we had support here and support here. So we're going to work under the assumption that you were planning to make a trade. We're going to zoom into a chart that's a little more, I guess, lower time frame. We're going to go to the 4-hour and just focus on price action here on the right side. Now we're on the 4-hour chart, zoomed in a little bit more, and we've already established from when we were zoomed out on the daily that this bolder white line down here was this key area of support that we were eyeing. I have other videos, of course, where I've put out that we've always kind of viewed support and resistance as a zone more than just one area. So let's just say you were planning to open this trade based on a couple of ideas. It was coming down to what you thought was a major area of support based on your technical analysis. You also were kind of eyeing the retest of this 200 moving average, which on my chart's this yellow, that's a 200 simple. So let's just say you decided you were going to open your trade right when it hit this 200 moving average at about 0.00. Let's see, I even have it marked on here, 0.00000984, right? And you've decided that you want to use your stop loss, and I'll have a future video coming out in the next couple of days that goes over tips and tricks on kind of how to set your stop loss as far as what areas to choose based on previous wicks and levels of support and resistance to try your best to avoid getting stomped out, which happens a lot in trading. But we're not going to focus on that in this video. We're just going to work under the assumption that you decided that just below this major area of support, you were going to put your stop loss. I'll change that line to that horizontal line to red just to kind of represent my stop loss, right? You came up with that just based on your own risk tolerance and the fact that that is below the support level that you were assuming would hold if price action was able to go all the way down to it. And your target was going to be this overhead resistance level where price action has been rejected on multiple occasions, once, twice, wicked up to it 2 or 3 times. And you just came up with this line here as being your target based on your technical analysis. We'll make that one also a little bit thicker so you can see it better. And now we're going to go over and pull out the tool that we would use in this case to calculate what our risk to reward ratio would be. To do that, we're going to go over here to this column on the left, where these tabs are, and we're going to go down to the one about 4 or 5 down. Let's see, 1, 2, 3, 4, 5, 6, 7 down actually on mine. And we're going to click this one. It has the prediction tools, and we're going to find the one that says long position. It's the very top one that comes up. If you wanted to add that to your toolbar over here, you could also click that and hit the star next to it if you wanted to have that be part of your toolbar. Clearly you can see it wasn't part of mine, so it's not a tool that I use all the time, but I do think it is a useful tool. Now we're going to click out here in the open area, and now we have that tool, right? What you want to do is where you're opening your trade, so let's say you had the buy order set right here at that 4 zeros and 10.20, you put it right on the 200 moving average, or my line I guess there. We're going to drag that middle part to there. We're going to take the top of it, and that's going to be where our take profit level is. And then down here on the bottom, we're going to drag that to our stop loss. And then this tool is then going to tell us what our risk to reward ratio for this particular trade would be. And it says down here, it's a 4.74, which basically means for every dollar, doesn't mean that I'm necessarily trading with one exact dollar, of course, but it just means for every dollar I'm risking in this trade, I have potential, if I hit my profit level, of a almost $4.75 dollars, $4.75, right? And it's just taking the percentages. My max gains from entry is around 24%. My stop loss was only 5%. So obviously 24 divided by 5 is where it comes up with this number of 4.75. Okay, well now let's take it one step further. Let's say my personal preference for a good trade is a 3-to-1 risk to reward ratio. I might be able to look at this now and kind of adjust a few things. I might say, hey, you know what? I did put that kind of on the upper end of that, support resistance line up here. Clearly you can see like this wick down here never got that high, either did this most recent one. So maybe I drag that down more to where the most recent one is. Maybe I even just go a tiny bit lower to kind of, secure profits if it was able to pump from where my entry is up to that level. Now I can drag this tool down to that new take profit level. And then let's go ahead and say, hey, you know what? I'm actually going to look back at my stop loss and reevaluate that as well. I can see that clear back here, it wicked quite a bit below the support level. And obviously, we're going to completely ignore this entire bear trap or just, bigger breakdown. But we're going to say, okay, it did come down to here a couple times. But now I'm going to focus on this wick back here. Let me see what happens to my risk reward if I drag this just barely below that wick. and then drag this down. What does that do? Put that there. Now we're going to zoom in again and look at this closer. Okay, now this put my risk to reward ratio as a 2.66. Well, then I can reevaluate again and go, well, that doesn't fit my 3 criteria. Would it be smarter to move my stop loss back up closer to, where my entry is, or would it be smarter to adjust my take profits? That comes down to you, your TA, and your own personal, I guess, style as far as how you're doing your, your technical analysis and deciding on when you're opening your trade. In this case, I guess just an example might be that if I was opening this based on the 200 moving average and this holding up as a higher low than this previous low, then I might just drag this back up to be a little bit closer to this previous low, maybe right about here, right? Now I can drag that up, and now it's going to show my risk to reward ratio using this long position tool is now a 3.8. Clearly that fits my ratio a little bit better. Maybe I am still comfortable with my take profit zone, but I really do just want to nail a 3-to-1 ratio. Now I can drag this down a little bit, or I can just drag this tool up and down. You can see that number's changing, and I can just drag it till it gets closer to a 3. And once it hits a 3, this is a 3.11, so that's pretty close. That could be where I decide to put my stop loss. And now this trade, as far as the criteria goes, fits my own personal 3-to-1 risk to reward ratio. And then just one final tip that I thought I'd share in this video as it relates to just this tool, which was the primary focus of this video. And just maybe a way to manage a trade a little better or manage your risk even one step further, just as far as using this tool in particular, is what I'll do is I'll go back and use the same tool again. I'll click off to the right of where I just put my criteria for my trade that came up with just over a 3-to-1 ratio as far as risk to reward. I'll drag everything the exact same, and once I have it all set the exact same, then what I'm going to do, so this is where I open the trade, right? This is where my stop loss is, same as over here, this is where my take profit is. Now I'm going to see what happens if I drag this down until it hits 1. So I want to see what point, what price level does this need to get to where now I'm just risking $1 to, for a $1 to $1 ratio, right? As soon as I get to that, or as close to that as I can get it, this is just barely 1.03, right? I'm going to go ahead and put a horizontal line there. What I could do at this point is set an alert. And basically the reason I do this, and it's not always exactly this way that I do it. Sometimes I will just move my stop loss up at this point. But if you wanted to at that point secure that no matter what, you don't lose any money in this trade, you could drag that down until it shows you a 1 and then set an alert. Say price action does go ahead from the place that I opened it. It goes up. I'm lucky enough that it hits this area and sets off my alert. At that point, I can then drag this stop loss up to break even, which is basically my entry point, right? Now it's at my entry point. Then, of course, if price action at some point just gets rejected really harsh, or Bitcoin rolls over and this comes back down, eventually hits that level, it's going to stomp me out of my trade, but at the very least, I didn't lose anything, right? One of the ways you could find your next take profit level or the next area where you decide to bump your stop loss up would be, let's just say price action, rather than coming back here and obviously stomping me out and closing my trade, let's just say it started to consolidate below this resistance, it breaks above it, retests it, and starts, trending higher. Now this becomes the support level. At that point, I can then drag this back up. So now we're going to go ahead and take this up higher. Not that way, I apologize. We're going to drag this up so that I can take this middle line and now make it this line and move this up to where my stop loss currently is, which is now a way for me to find my new one-to-one reward spot. So I could say, okay, my new one-to-one reward spot is here. Let's set an alert at that level. And you can just kind of rinse and repeat this. So now price action trends up and hits that, triggers my alert on my phone. I do the same thing all over again, right? Where I come over here and I move my stop loss up now to just below or at this point, whatever, I feel is a safe spot. But for the sake of this example, let's just say I move it straight up to there. And you could just kind of manage your trade as you go up this way. That way, at worst case now, if it comes back down and it triggers, I at least secured profits. And how much profit, might you ask, would we have secured in this case? Well, we can use this fancy little price range tool provided to us on TradingView to figure that out. Now, under this example where price action had went up to this level of resistance, got rejected, my stop loss, which I've made a little bit brighter so you can see it better, was right here. Price action came down and hit my stop loss. Well, we could take that little price range tool and say, okay, this is where I entered the trade initially. it hit my stop loss, and I still secured just right around 7%. Well, you can look at this previous example or this previous swing. So right now, this is the swing we're on right now, right? But this previous swing, this would have worked pretty well because you can see that had I entered the trade at the same level, so let's say I entered it here, retested the 200, that same level. It went up, broke above. At this point, I would have moved my stop loss up to this level, where you can see price action never did come all the way back down there, and it went up to here. At this point, I broke up to this next level. Now at that point, that's where I moved my stop loss up to here, and it didn't actually go back down to that level right away. It actually went all the way up to my top target. At that point, I could have closed the entire trade, or maybe I took 50% profits and decided to let some ride. Well, that's where it would have, eventually stomped me out, because as I let it ride, hoping that it'd break this, flip this as support, and go one leg higher, it did eventually roll over, came back down, and would have hit where my stop loss would have been at that time. But at least at that point, it would have secured me, profits in that example. Let's see, up here at this level, which would have been, almost 15% profits. If that last part got a little confusing for some of you, please don't stress. I will make it a point to put out some future videos in the coming days that go over a little more in depth or more advanced on kind of how I personally manage a trade as it relates to when I bump up my stop loss, kind of where I determine to put those, and all those kind of finer nuances of how you manage a trade and manage your risk or your risk to reward. Otherwise, I hope you did gain some value from that. If you're liking the content, please remember to like and subscribe. We'll talk to you tomorrow. It's T